Hello and welcome all the Web3 enthusiasts out there. This is Max speaking, and welcome to the new episode of Synopsis. Today we have a great guest, Morgan Krupetsky, the head of institutions and capital markets at Ava Labs. Super excited to have you here, Morgan. How are you today?
I'm good. Thank you for having me. Excited to be here.
Well, always a pleasure to have this kind of guests here, and we have a bunch of questions prepared for today, so let's get straight to the action if you don't mind.
Sounds good.
Awesome. So to warm up, the first question, can you please tell us about your role at Ava Labs and what it means to lead the institutional vertical?
Sure. So like you mentioned, I lead institutional and capital markets business development at Ava Labs. Um, the institutional vertical is actually pretty broad-based. I think when people in the crypto or digital asset industry think about institutions, a lot of them are thinking about either, the incumbent financial services institutions, so a lot of banks and asset managers, or they're kind of thinking about more crypto native institutions like DeFi or yield funds or delta neutral funds. And so the institutional vertical from a business development standpoint really kind of spans everyone from kind of crypto or blockchain native companies who are taking a kind of B2B or B2B2C approach to go to market, all the way to what I would call like the Web 2 disruptors or the fintechs, a lot of the neobanks, wealth tech platforms, and other types of fintechs out there. And then all the way to and inclusive of, the regulated buy and sell side institutions, FMIs. As any of these kind of partners executes a digital asset strategy, leveraging Avalanche in some way, shape, or form, a lot of it is around tokenization, as you can imagine, or as they build different kind of products and services on Avalanche, really focused on wholesale banking and capital markets. That's kind of where we fit in. And so different firms are obviously at different points in their blockchain and digital asset journeys. For us, we really seek to cultivate trusted advisor relationships with our partners. And that could look like everything from just pure education and technical deep dives all the way to, becoming true kind of build and go to market partners with the builders building on the Avalanche network. So it really depends on kind of where they're at and what they need, but we really slot in wherever that may be.
Awesome. So I get the context now. Thank you. And since this is your first time at Synopsis, a little more about your background. So could you please tell us actually about your background prior to joining Ava Labs?
Sure. So I started at Ava Labs 4 days before Terra. So my timing was really good. I joined, yeah, totally. I don't know what a bull market's like professionally. Um, and so I joined 3 years ago, and before joining, I worked in TradFi for 12 years. All of that time was at a large bulge bracket bank. And within that, I spent the majority of my time in capital markets. So mostly I was doing FX and macro derivative sales. I was covering hedge funds, asset managers, pension funds for their kind of FX and macro needs. So that could have been things around, financing certain kind of foreign asset purchases or redemptions or hedging or speculative purposes for hedge funds. Um, and then the last 2 years I spent as the chief of staff to the firm's chief compliance officer. So I had ultimately really kind of good experience in both the front office and second line of defense, and so it kind of provided a really good and holistic background and an experience to kind of how the different parts of the firm operate and work together. And then ultimately, I think my experience there, and frankly, I think that it would be a comparable experience whether it was at any big bank or frankly any large, traditional incumbent institution. But I really saw there, what happens when systems don't talk to each other necessarily or don't inherently talk to each other. And through my experience and learning about digital assets and smart contract capabilities, I really kind of, my eyes were kind of opened to the idea of like what blockchain and smart contracts could do as it relates to upgrading legacy financial services infrastructure and institutional workflow. So everyone in the industry kind of has their different lens by which they enter the space and that they're kind of interested in the space, but mine was definitely on the more kind of operational efficiency approach. I always say like the blockchain is not an industry, right? It's like a horizontally applicable infrastructure that applies to so many different industries, obviously, just like the internet. And so mine was definitely from more financial services, operational workflows, and really seeing how this tech could help upgrade a lot of that.
Awesome. So thanks for sharing, and it's always interesting to listen to the story before entering Web3 from our guests. And
Yeah.
I do believe that if someone had some kind of doubts, now everyone is must be pretty sure that you are the very right person to discuss a lot about the institutional adoption. We have actually uh, a major part of this discussion for today. So,
Yeah.
what I also mentioned as an interviewer for maybe the last 1 or 2 years, the paradigm is kind of changing. Everyone in 2024 was talking about mass adoption. Now we're more and more talking about the institutional adoption. So, Morgan, from your point of view, how would you describe the current state of this institutional adoption in crypto? And how do you think? Are we still early, or have we crossed some major points already?
I think the answer is yes to the both of the both of the last questions. Like I think in the grand scheme of things, we are still early, but I think that comparing kind of this time around to 2017 to prior cycles,
Yeah, of course.
there's been definitive movement in the right direction from not just an adoption standpoint from it, but from an institutional adoption standpoint. So again, like institutional adoption of crypto can mean so many different things. Um, and in a lot of instances, what we've been seeing is really even since I started, I think the worlds of DeFi, CeFi, TradFi, tokenization have like increasingly kind of converged and continue to do so. And I think we'll again continue to see what that looks like. Both in a B2B as well as a B2B2C capacity. So it's exciting to kind of even just within 3 years have seen the movement and the progression in that case. Again, institutional adoption means a lot of different things. There's been definitive examples of what we've seen in terms of institutions increasingly at least accepting that crypto is here to stay, accepting that the technology is here to stay, and then increasingly offering based on their customer demand different products and services that kind of demonstrate them dipping their toe and getting more involved in the space. Obviously, one of the big examples that has transpired over the past couple of years has been the Bitcoin and Ethereum ETFs. Large traditional asset managers whose bread and butter is to issue ETFs have launched these kind of cryptocurrency focused ETF products which have really provided a vehicle for additional institutions and retail clients to get exposure to the asset class in a way that's more, familiar to them. And we've also seen a lot of asset managers issuing and tokenizing some of their fund offerings on various public chains as well. One of the most notable examples is BlackRock's BUIDL, their money market fund, Franklin Templeton's Benji, Apollo's ACRED, their private or one of their private credit funds. And so those are just some examples, I think, of, again, these worlds kind of coming together. I am excited for the day where we start seeing these like traditional firms actually start to be the consumers of some of these goods and actually deploying capital themselves on chain, which we can kind of talk about what that would entail in order for that to happen. But um, that necessarily hasn't happened or hasn't happened in size yet. And the last thing that I would say as a kind of example of institutional adoption of what we've seen is, I think, especially after, well, actually, I got a few things. One, obviously, the increasing market cap in stablecoins and only continuing to grow has really drawn the attention of a lot of institutions and enterprises. Obviously, we had recently the Circle IPO, and then before then, we had Stripe's acquisition of Bridge, which I think really put a spotlight on, or an increased spotlight on the stablecoin space, which has prompted a lot of fintechs and other types of firms to figure out how they can offer stablecoin-based payments to their customers. So those are just a few examples. I think it's exciting to kind of see demonstrable progress, even in like a relatively short period of time. But all that's to say is, in the grand scheme of things, I do think we're still early, but definitely progressing in the right direction.
Wow, thank you. So pretty detailed, and I like a philosophical approach towards this question. So
Yeah.
getting closer to Avalanche, actually. So the next question is, could you please tell us what are the primary drivers bringing institutions to Avalanche versus other blockchains?
Yeah, so I think, and obviously I'm drinking the Kool-Aid. I chose to work here, so I really do believe that Avalanche as a platform has awesome tech that works, and it's very exciting to kind of see the network grow and scale and be built and operate in the way that was always kind of outlined in the white paper from day one. But in terms of institutional kind of attraction to Avalanche, I would say there's a lot of technical reasons, and then there's a lot of kind of business development, strategic focus reasons that us from an Ava Labs standpoint, I think, bring to the table and bring in terms of our relationships that we've built up with our institutional partners. On the technical side of things, I think there's like a few things that have really resonated in speaking with and working with institutions. I think at a base level, historically, institutions have been used to building on what we would call enterprise chains, whether that's Hyperledger, Quorum, or private Ethereum. And so over the years, they've become very accustomed to building on EVM-based networks. And so Avalanche is EVM compatible. And so it makes it very easy for institutions to either migrate to or expand from their current blockchain-based builds to Avalanche, whether that's on Avalanche C chain or their own Avalanche L1. It's very easy to kind of lift and shift or port over the code that you may have deployed on one of these enterprise chains to Avalanche. So EVM compatibility has been a huge draw. Two, the fact that Avalanche is powered by Avalanche Consensus means that the network is extremely fast. It enables sub-second transaction finality, which is obviously important in general, but especially important when you're starting to talk about high value transfer and kind of high frequency transfer of assets like that, which happens in financial services. Like the idea that, you're waiting for an FX trade to settle and you don't know, has it settled? Will it settle? Will it settle at the price that I dealt at? Like, that's not acceptable when you're talking about financial services, right? You need certainty, you need kind of high throughput execution from an environment standpoint. In addition to that, the concept of Avalanche L1s has very much resonated with regulated financial services institutions, especially banks. So banks historically, again, have been building on these enterprise chains. And part of the reason that they've been doing so is that they, for their various kind of purpose-built infrastructure and applications, have needed to have an environment that was permissioned and private. And so with Avalanche, it allows these institutions to kind of get the best of both. The L1s that they deploy or can deploy within the Avalanche network can be fully private and then permissioned at the validator level, permissioned at the smart contract deployer level, and then permissioned at the transactor level. So like multiple levels of permissioning based on whatever criteria that is relevant. It could be geographical kind of limitations or KYC, investor accreditation, whatever is necessary. And so that's resonated as well. So it provides, again, the best of both of that world, plus the best of a lot of the public blockchain infrastructure that is drawing a lot of the activity that we see today out there in like the public realm, right? So that's DeFi primitives and integrations, stablecoin integrations, activity, liquidity, all these things that happen and are cultivated on these public permissionless chains. And any given institution that is building on their own L1 with an Avalanche has the ability to tap into that kind of activity while still keeping their environment private and permissioned, leveraging Avalanche's native interoperability protocol. And so, again, it kind of gives them the best of both. A few other things that have really attracted institutions to their own L1s is the fact that they don't need the native Avalanche token to power the transactions on their network. Some have expressed interest in using a bank issued tokenized deposit, a stablecoin, or even a totally valueless token that cannot be transferred outside of the confines of the network. All of these things have very much resonated with banks and frankly any company that just wants to obfuscate and abstract away the whole like crypto for gas paying experience. And so all of these things, I think, collectively have really drawn institutions into Avalanche L1s, and then as a way to kind of increasingly enter the public blockchain domain, if you will. And then from a business development standpoint, a lot of us come, as you know now, from the traditional financial services space. So Ava Labs is an awesome mix of academics, engineers, and business people. And a lot of the business people come from TradFi, both hedge funds as well as various banks. And so, we again pride ourselves in really cultivating and developing these trusted advisor relationships, helping our partners navigate the use case, making the business case to their internal governance committees, helping them navigate regulatory discussions. And ultimately, our goal is to set them up to succeed on Avalanche because obviously, ultimately, their success on Avalanche equals our success. And so I think between both of these things, Avalanche has really, built this kind of institutional reputation that has really resonated with, frankly, not just institutions, but also individual builders who are hoping to ultimately sell into the institutions or the customers of the institutions over time. And so it's, I'd like to think that we've developed a really nice little ecosystem over here.
Wow, this is just awesome. So much
Oh, a lot.
information, but you
Sorry.
you managed to put it everything in order, and this is the great example of how this kind of confidence speech can convince, I believe, anyone
Are you
to
convinced?
me. Yeah, BI, BI institutional, I would join for already. Wow. So yeah, thanks. It was really interesting. And can you also share some examples of how institutions are already using Avalanche today, or some key partnerships you've seen evolve, except convincing me?
If I give you the list, we need more than an hour. But I will highlight some of the
Yeah, just several.
kind of the big ones. So we've worked with a whole host of different really high quality asset managers as they issue and tokenize different asset offerings and funds on the Avalanche C chain, which is the public permissionless liquidity hub. That include, I mean, there's like a whole host of different again, really high quality assets on the network, although not financial advice. And that includes a whole host of different money market funds from BlackRock, Wisdom Tree, Franklin Templeton, VanEck, and the list at Wellington, and the list continues to grow. There's been private or alternative asset funds, including Apollo's ACRED and one of KKR's private equity firms, and a crypto carry fund from Laser Digital. So that ecosystem of really kind of high quality tokenized assets continues to grow, which we're very excited about because we're seeing increased interest in those assets among different types of crypto native and more, as well as more traditional investors. So that's, I would say, one example from a Avalanche C chain standpoint. As it relates to Avalanche L1s, we've done a ton of different POCs and work with various banks under the MAS's Project Guardian, including work with Citi as well as JP Morgan, both in the FX space as well as, again, in the alternative asset space, really showing in the latter how if you end up tokenizing both liquid assets, liquid and public assets, alongside illiquid alternative funds, and kind of apply blockchain smart contracts and tokenization, it really kind of creates the combination for the ability to have an offer for asset managers to offer um, alternative assets inside of discretionary client portfolios at scale, which is something that currently, doesn't really exist because the operational burden to administer any one of these alternative funds is too great to enable this kind of mass systematic exposure for accredited investors at large. And so that work kind of really demonstrated, a future that could be possible. And then the last one that I would mention is our work with a company called Intane, which is an asset-backed securities administration platform that has its own L1 on Avalanche, and they're cranking away. They're actually doing a lot of great work. They've processed billions in terms of ABS to date, and kind of continue to do so. Big things coming there that we're excited to share. But yeah, I think for us, we're not necessarily prescriptive in terms of if a company or an institution should or has to launch on the C chain or on their own L1. It very much comes down to what are they building, what are their requirements, and then kind of those things dictate the best blockchain architecture from there. But really exciting, I think, things happening on both the L1 side as well as the C chain side of things.
Awesome. So thank you for great examples when it comes to this type of things. It's always much more easy for many, so including me, to understand, and we see that the things are going really great. And the next question I have for you, so could you tell us which use cases are gaining the most traction? So is it tokenization of real world assets, on-chain fund infrastructure, payments, etc.?
Yes. I think it's all of those things. And I actually think that those things that you listed are not necessarily mutually exclusive. I think part of the reason why we've seen an uptick in interest of tokenized funds, especially money market funds, has been because you have this growing stablecoin interest and stablecoin landscape. Many of the, I would say, issuers of which are increasingly using tokenized funds as collateral to back those assets. And so I think all of these things are kind of related. Topically, what I think is you know, increasingly on the radar and agenda of a lot of institutions, not just banks, but fintechs and even just traditional corporates or enterprises, has been stablecoin adoption. And again, offering stablecoins as one of the various means of payment for businesses, customers, whether they are individuals or other businesses. And so again, I think the increased M&A activity in the space and the IPO activity in the space, especially as it relates to stablecoins or stablecoin-based infrastructure, has really, put a spotlight on this area of the market. And I think it will continue to grow and really pick up throughout the rest of this year and beyond. And so of all the things, let's hone in on the stablecoin space, which is again becoming increasingly top of mind for a lot of institutions to execute on a stablecoin strategy if they had it, or create a stablecoin strategy if they hadn't before.
Awesome. And which types of use cases are you personally most excited about?
Yeah, I think all of the above. But what I would say in general is I'm very excited because we've been talking about this for a while. I'm very excited for that when we get kind of net new users, whether again that's businesses or retail, net new capital, and stickier, call it non-mercenary capital into the space that is using the technology, whether that is stable coins or other types of tokenized assets, as a way to um, access something that they historically haven't had access to, or to effectuate something or process that historically was very cumbersome to do, in a way where they're accessing it where the tech is totally abstracted in the background. They don't necessarily know or frankly care what protocol, application, token they're using, but that they have access to this really cool new product, service, or capability that is being offered by, an application that they already use, by a platform that they are already comfortable with. And all of that, blockchain stuff is fully abstracted in the back end. I'm very excited for when we're able to kind of point to increase. I mean, we're starting to see this, but increasingly more and more examples of that. That's what I'm very excited for. And I think we're poised to really start seeing that sooner than later, especially because a lot of these fintechs are increasingly entering the space.
Well, okay, got it. Thank you. And the next thing I'd like to discuss is something what we can finally easily discuss. Half a year, at least a year ago, it was pretty difficult to ask our guests about some regulations. Many were not ready to comment on that, even just from a very far perspective. And now we have a chance to combine the question about institutions and regulations. So from your perspective, could you please tell us how are institutions thinking about compliance in crypto, and where are we going right in this evolving regulatory landscape?
So I would say, I think it's from an institutional standpoint, especially when you're talking about, large banks. I don't necessarily think they're ready or not even ready. They would never be willing to compromise compliance for the sake of adopting this technology in some way, shape, or form. That said, I think there's been a lot of kind of positive progress that has been made on the regulatory front, especially more recently in the US, but increasingly, and even before the US globally, that has increasingly made institutions more comfortable, like dipping their toe and increasingly getting involved. And you see it in the news and you see it in kind of market developments, whether it's been the executive orders that were signed in the US earlier this year. With the goal of making kind of the US the crypto digital asset capital of the world, to the repeal of SAB 121, which made it prohibitive for banks to custody crypto on their balance sheets. All of these things, and obviously the Genius Act from a stablecoin standpoint, all of these things are slowly enabling a lot of these incumbent institutions as well as fintechs to um, continue crafting their digital asset strategy and really start executing on it. You have, the heads of major banking institutions saying that they would consider issuing their own stablecoin, and so I think there's been a lot of very positive developments in the regulatory front, again globally, but especially in the U.S. that is really, um, I would say, like starting to put a sense of urgency in these incumbent institutions to really start figuring out how are they going to integrate the tech into their day-to-day business. How are they going to address a growing client base that potentially maybe they don't cover or take on today. And really, how do they keep up from a digital transformation perspective? This has been something that I think has been top of mind for them even before crypto became increasingly in the mainstream, I would say. But I think, again, with how fast this industry moves and the innovation and the things that we've seen in this space, it really kind of ramps up, I think, the sense of urgency on the digital transformation front.
Wow, thank you. So you dealt easily with this complicated question, which was made even more complicated by the way formulated, but
It's okay. Just
uh,
crypto regulation, compliance.
yeah, everything in once. And so, yeah, thank you for dealing with it. And now we're in the final part of this interview. So, of course, it's time for some forecasts, expectations, announcements. So, the first one from this section. So, even if you say that from one perspective, we're still early
Mm.
for some big things, crypto is a rapid world and everyone is expecting, for example, altcoins before the bull run begins. So everyone, I believe, that is expecting some new waves of adoption. So from your point of view, what does the next wave of institutional adoption look like, and what needs to happen to unlock it?
Oh boy. Um, well,
Just
I
some
think,
energy.
some of the things that I think I mentioned earlier we'll start to increasingly see. I think, especially I came from, I went to the Money 2020 conference in Amsterdam last week, where there were a ton of different companies there, both Web3 native as well as traditional Web2 native, if you will. So much conversation around stablecoins, the developments in the space, stablecoin strategies, and I think as we look ahead, we'll see many, many more companies integrating, in the first instance, just the ability to pay by stablecoin or accept stablecoin payments. Again, direct, like whether that's retail or businesses, I think that space will really continue to grow. I would actually recommend there was a recent stablecoin report that came out from Artemis and Dragonfly that really kind of analyzed the past few years of stablecoin activity and what that looks like. And the bulk of it actually has been in B2B payments. I think that will just continue to really expand as the focus on this space grows. So I think, again, increased integration into payment offerings. And then I think with that, we'll probably start to see the growth of, again, like other types of tokenized assets as well, right? Because once you have access to and can pay by stablecoin, presumably you might want to earn yield on any of those idle balances that are sitting with you in the meantime while you're waiting to put it to work. And so how do you generate yield on stablecoins? It could be through DeFi integrations. It could also be through on-chain money market funds. And then from there you can start offering, higher yielding products. And so I think it will really, again, create like a sense of urgency to start tokenizing other types of assets to offer this on increasingly on-chain capital access to other types of assets and payment capabilities.
Wow. So thank you. And what I hear often during the recent interviews, and I do believe that our attentive viewers can also mention it, is that how often the word stablecoin we can hear from our guests. So besides the obvious AI agents trends, stablecoins are coming to be some big thing, and we guys need to pay more attention for that and think about the ways we can
Yeah.
get some benefits out of this.
I think I probably mentioned the word stablecoin at least like 50 times
Yeah,
in conversation. So
that's hard
pay
not.
attention.
But yeah, this is one of the things we always ask our guests to give some advice, what to pay attention to. So guys, put notes on stable coins. Even I'm not sure how I can benefit from it now, but I need to make some research and probably will make some more episodes on that. And
Yeah.
yeah, getting back to our discussion, and for sure, let's speak a little bit more about Avalanche. And where do you, Morgan, see Avalanche and maybe the crypto industry in general in like 5 years from now, and in terms of institutional environment, of course?
Yeah, so I think I outlined kind of what I'm excited about, slash what we'll increasingly see from an adoption standpoint. I think as that world of tokenization grows, um, I think we will also see, from an Avalanche standpoint, inherently increased activity on the Avalanche C chain. I think especially after certain network upgrades to the Avalanche network, the cost to send stablecoins on Avalanche, whether it's USDT, USDC, AUSD, or any other type of stablecoin, has the cost of that transaction has decreased significantly. And so I think because of that, we'll see a lot more payments and FX and related use cases being deployed on the Avalanche C chain. So I think we'll see an increase in activity there. But I also think that uh, we'll see an increase in the number of L1s within the Avalanche network. I think people are increasingly realizing that the concept of purpose-built chains is here to stay. And so whether that is a large company that already has product market fit that is moving some of their operations, product services capabilities on chain, or if it's a blockchain native application that has accumulated a ton of different users and adoption migrating to their own L1, I think we'll see a lot more of these L1s that are not general purpose chains, but that are really purpose built for and optimized for the particular use case. And so as both as the I think as the Avalanche network grows from both of those sides, what you'll also see is increased movement of users, liquidity, tokens, messages between the L1s as well as between the L1s and the Avalanche C chain and back. So it's really, I'm very excited because I think like when that happens, it'll really be like the Avalanche vision come to life and in practice. And we're starting to get there, but I think, when we talk about like the next 5 years, that's like an eternity in this industry. I think and I'm very excited for, to seeing that all kind of play out.
Well, sounds awesome, and we'll be tracking this forecast since we're here. We'll be staying and looking for how the institution adoption comes. Well, at this point, we came up to the traditional final part of our interviews. So, Morgan, could you please give some piece of advice for our viewers? This might be some call to action or some trends to keep an eye on, whatever you find useful for people to hear. Please go ahead.
Yeah, I mean, I would say like for me when I was kind of transitioning from TradFi to this space, I spent a lot of time reading about reading different research reports on crypto Twitter, on LinkedIn, reading different white papers. And that's really kind of like the best way, I think, to stay up to date and learn about the industry in this space. Everything is out there. Everything's, pretty public and posted. And so there's so much information out there, obviously podcasts like this. So the best way I think to kind of keep up to date and learn about the space is really just to read and listen to what's out there because there's a lot of information out there. And again, people are very open about sharing their views and sharing developments in the space. So I would encourage people to kind of continue on that path, which obviously they're doing if they're listening to this. And then I would also like suggest again, not financial advice, but te like if to the extent that you're involved in this space in some way, shape, or form, whether professionally or because it's a personal interest, I would encourage everyone to actually test out the technology itself, right? Like try different DeFi applications within, obviously I'm biased, but the Avalanche ecosystem or other ecosystems, test out what it feels like to to load up and open a wallet and to send funds from one to another, to deploy funds in DeFi and really kind of test out. And there's so many different applications out there, not even just financial applications, but beyond institutional, just a ton of different types of verticals, whether it's social or other, test it out. Like feel and experience what it feels like to be on chain. Because I think that has also helped to inform my view on the space in terms of what exists and then also what gaps are still there, what needs to be filled, and to have a really kind of holistic view on this really rapidly growing ecosystem.
Wow, awesome. So, great advice is guys keep learning. And yeah, the best way to learn something is to try something. This is also about my experience. Like when I joined crypto in 2019, it took me almost a year to just try using MetaMask and doing some transactions on chain. And now everything is much more user-friendly than it was back then. So yeah, great advice from Morgan. So put the notes, go try, test something, and this is like will be a great multiplier for just learning something without practice. And at this point, we're now done for the day. It was a great time, and to believe that we have 100% of viewers watching us until now, and because you managed to get my attention at every single answer, so that's why I get some ping during formulating questions, but in a good way. So it was very insightful, and thank you, Morgan, for joining today. We'll be looking forward to see you in more episodes.
Great. Thank you for having me. Really, really appreciate it.
Okay, awesome. And yeah, thanks for our viewers, for those who watching us till the end. And guys, follow us on socials, follow Avalanche, follow Ava Labs, and stay tuned. Keep learning, stay safe. See you in more episodes. Bye bye, everyone.